Hello and welcome to interest.co.nz. I'm Janae Tibbs-Shirani here with another one of our double shot interviews. Today I'm joined by Insurance Australia Group's New Zealand Chief Executive, Jacki Johnson. Welcome, Jacki. Thank you for joining us. As a bit of background, IAG is New Zealand's largest general insurer, which sells its products through the State, Lumley, NZI and AMI brands. Looking at the group's annual results released earlier this month, it seems IAG is still suffering from a Canterbury quake hangover. IAG's used up its $4 billion of reinsurance, so is having to dig into its own pockets to fund the remaining 22% of claims yet to be settled. So, Jacki, how is IAG aiming to continue paying these Canterbury quake claims, given this is the situation with the reinsurance?
Yeah, well, the reality is under any licensing provision anywhere around the world, you always have to hold capital for your liabilities. So we've got the money in the bank, so to speak, to pay for those claims. So what we do is we estimate the claims and then we make sure we've got capital and a buffer within the country on our balance sheet to be able to pay those claims. And obviously we've had a lot of support from our group. And as long as our underlying business continues to be strong, you end up getting ongoing support. But I can assure everyone that the money is in the bank and that we are paying claims and continuing to do so.
Right. So that, while that reinsurance, I should say, has depleted, the group is actually still supporting the New Zealand business.
And more importantly, that money is here in New Zealand. And, no one could want claims paid faster than myself. I think it's a really important thing that we're helping Christchurch recover. We've really stayed very focused and stayed the distance, dealing with a lot of very, very complex issues that are affecting all lives of people in Christchurch. And we've led through a lot of committee meetings to try and solve some very, very difficult issues that will help actually get people into a more certain position.
Sure. Over the past year, I understand IAG has increased its provisions for the quake claims by $150 million.
Yes.
Does it think it'll increase these provisions again in the following year?
One of the things with any claim, whether it's any class of business, is you have to estimate the claims that you think are coming in and then the assessment of those claims. Then a few things that change in Christchurch. One is actually understanding the building standards. Now all those building standards are locked down and we understand what they are. If you think about building a house on the ground in Christchurch, you have to understand the geology of the ground and the engineering impact for foundations. We now have that information. We didn't have that a year ago. And then you need to start understanding how many claims you're going to have. That is still a little bit of a challenge in understanding how many claims might come from the Earthquake Commission. But we're well reserved on everything that's in our control and what we know. We've not only had our own actuaries looking at it, we've had peer reviews from our parent actuaries, and we've had an independent body review all our claims. So 3 levels of checking, if you like, about all the assumptions going into those liabilities.
Sure. And in terms of some figures, some numbers around the progress we're seeing, annual report says 78% of claims have been settled.
Yes.
I don't know if you can give us a bit more of a breakdown as to the number of properties that have been settled, because one property might have a number of claims, for example.
I probably don't have them. It's quite complex and I don't have the data right in front of me. If you think about nearly every householder has more than one claim because the claims relate to per shake, and it also could relate to a contents claim and the building itself. So what I can say is the commercial claims are nearly finished and settled, and that includes the building and the business interruption. And there is groups of the residential claims that have been a little bit more complex that we're working through the resolution. Certainly when you look at shared property, they're a little bit more difficult because you might have several properties with different insurers, and as an industry we've formed a consortium to be able to work through the issues so that you have one lead insurer helping the residents despite them have different insurers. So sorry, I don't have the numbers right in front of me, but it is quite complex. But we are on, when we look at all our planning, we can see how every property will be finished by the 30th of June 2015, with the exception of these shared properties that are taking a little longer.
Right, and that is actually quite remarkable, isn't it, that arrangement with the shared properties, in the sense that you have a number of insurers coming together and, you know, working together to...
Yeah, and obviously we needed to make sure that under Commerce Commission they were comfortable with what we were doing there, but at the end of the day, a lot of other jurisdictions around the world, you would have a body corporate and you would then have one insurer. You would not have this complexity of different insurers. So we very practically, as an insurance industry, as CEOs, got together and said, look, how can we work together to make sure that the residents of these properties and the owners of these properties have a solution going forward.
Sure. All right. And Jackie, just to sort of talk about something else a little bit different, in June, I understand Berkshire Hathaway bought a share in IAG.
That's right.
And that will sort of prop up the company's capital. I'm just wondering how this arrangement might affect IAG's New Zealand customers. Will they be affected at all by this deal?
Not really. I mean, that deal had three parts to it. Predominantly, it was about Berkshire Hathaway wanted to have an interest in this part of the world, and they predominantly are in investors and not so much running operations. And what they were looking for is an investment vehicle in our category, and they have had a very long-standing relationship with IAG through our reinsurance arrangements, through two companies of theirs that have reinsurance companies. So it became a natural fit given we had a 10-year relationship as companies. They really are a shareholder in that part of the deal. And for us, what it means is we've got a shareholder that really believes in our part of the world and our sector, which is always comforting because it means they're not coming in and going out of the stock and creating that volatility. The second part is that a quota share, which means that they will provide, if you like, for want of make it simple, is some level of a reinsurance protection that gives us some surety in terms of how that works. And the third part is helping be the back office more in Australia than here in terms of the business relationship that we'll have, but predominantly having a committed and stable shareholder and the quota share is a very powerful thing for us, not only for New Zealand, but obviously it gives some level of surety for New Zealand as well.
Sure. All right. Okay. Something else which I've picked up on in the financial results release was a comment was made that the competition had sort of ramped up, I suppose, a bit in the direct market due to a few newcomers and also, I guess, your existing competition. I'm just wondering how IAG sees itself in the market. You know, it's still the predominant general insurer, but we do have the likes of Kiwi and Trade Me Insurance, which are coming in and they have, you know, really ramped up their advertising campaigns is kind of what I've noticed from a consumer's perspective. How do you see IAG positioning itself in the market?
Yeah, I mean, we never rest on our laurels, so we don't say largest market share means that you're the leader player unless you invest in a leadership position. And by that I mean the amount of capital you can put and back yourself in terms of when things happen, either geologically or with a climate event, and making sure you've got really good capital behind you so you're not coming in and going out of the market, how you attract good talent to be able to really keep changing, becoming relevant for your customer and investing in our technology. So we have our own strategy that we play to. I think it was in these studios only 2 years ago that I said I was quietly confident about getting permission for the Lumley deal going through the Commerce Commission because we will remain a very competitive market. Maybe it's a bit, be careful what you wish for, because then 2 years later we've got a very competitive market. And as I said, we play to our own strategy, mindful of the competition, but for us it's about staying relevant for our customers and our intermediaries who sell our products, and how do we stay relevant when I'm more concerned about disruptive change, either in customers' buying behaviour, capital flows, geological events, natural perils. How do we keep abreast of everything that will impact on our customers and stay very, very relevant for them?
Yep, sure. Actually, it was just talking about the market more widely. Wee while back, I was at an insurance conference, and the former Lumley CEO, who's now he's the Endo Insurance CEO, John Lyon, he made quite an interesting argument. He thought that actually Got to get this right. Insurers sort of risked being squeezed out of the market a wee bit from reinsurers at one end and brokers at the other end. He was saying there's a bit of a movement at the moment where the reinsurers are actually trying to get their capital to the consumers more directly by actually selling insurance direct, and the brokers were trying to move into some underwriting, taking on some underwriting capabilities as well. And he said it was really important for insurers in the middle, I guess, to add some value to the offerings. Yeah. Is this something which you've thought about? And
yeah, I mean, we look at strategy and look at every part of a convergence. So if you look at any market of any category, there's always the disruption that's going to come through the value chain. So how do you understand the value chain? The reason reinsurers started to chase down the value chain is because they were being competed with through some catastrophe bonds when superannuation funds around the world have a lot of investments, and there was very low return happening in particularly some of the European and American markets. So what they were looking at is, could they invest in catastrophe bonds and get a better return? And that meant the reinsurers were having some competition from where they weren't used to. So they were having to look at alternate markets, and so it went on the chain. For us, it is about adding value and really understanding and immersing yourself with the customers constantly and understanding what it is they want. And not all customers want exactly the same, and being relevant for them. And you need, we've got a very big workforce, you actually need all 4,000 of people really being passionate about the customer and providing insight. So we run human-centred design boot camps to say, let's put ourselves in the face of a customer and in the shoes of the customer, and let's bring the customer in the room all the time, no matter what the decision is being made, to really understand any changes that we have to face.
Yeah, and actually a change which we've just spoken about now is, I guess, the changing demographic of New Zealand. We're not, it's a changing market which we're dealing with, and I understand you've just actually been over to Asia and done a bit of research on this. What have you sort of come back to New Zealand, what sort of findings have you come back with, and how do you think IAG might develop its products to target our changing demographics?
Yeah, I mean, I take our leadership position very seriously, and when you look at New Zealand, is the most highly penetrated property insurance market in the world. But lucky we are, because we're the third most highest to have a natural event in terms of geological risk or climate. And you only have to take this year in just the North Island flooding that happened in series of events. We had $44 million across the whole insurance industry. So property insurance has become a very important part of protecting New Zealand. What we find, and the reason I was in Asia, we have an Asian operation, and one of my counterparts runs that across 7 different countries, and we were trying to understand what it is that they're learning from newly developed markets of what people buy or don't buy. And the predominant view is they buy life and health insurance, but not so much property insurance. So you think about New Zealand, constantly in the press, particularly for Auckland, is about the property market and who's buying the property. So if you've got new immigrants buying the property and settling into New Zealand, are they understanding insurance, and property insurance in particular? Otherwise, we will have a shift over time to less penetration, because people not actually understanding how important home insurance can be, or business insurance for that means too.
No, that's an interesting dynamic. All right, and Jacki, just another thing I wanted to touch on, I guess, was, we've got it seems like the market is moving very quickly, and another area that it's changing in is sort of the regulatory environment and the work the government's doing, sort of looking at how the Earthquake Commission's role might change in the future. So there's a review happening at the moment, and of course, as you will be aware, the government is proposing to change that AQC cap on buildings insurance from 100,000 to 200,000. But on the other hand, it's also looking to get rid of contents insurance. So if these changes were to go ahead, like the government is proposing at the moment, how will that affect IAG's business?
Yeah, so we've partnered as part of ICNZ and in our own right with all the policy advisors in Wellington on this issue now for 2 years about, let's take Christchurch of lessons learned. And if you think about the EQC, there are 3 key roles they play. One is to be a fund to protect New Zealanders when the worst does happen and there's land damage and some property damage they are responsible for as well. The second arm is research, which I think, and I've said it publicly, it's first-class research arm under GNS, probably the best I've seen in the world of understanding geological events. And the third is a claims manager. It's very hard if you've only ever got a workforce of 22 people and your general business is not about managing claims to ramp up at a time when people need you most. So part of the proposal, in terms of, it's neither here or there about where the attachment point comes for property. In terms of IAG, we can work with either. But what we want is some certainty for our customers about actually how will the claim get managed and who you lodge it with. And also contents. There is not a lot of role that the Earthquake Commission can add on contents, so that could come to the industry. And then we have procurement channels and an ability to streamline claims settlement under contents very, very quickly. And so that's why we believe that rightfully should sit back with the industry. But also the thing that's become very apparent over the last 5 years, and I spend a lot of time with customers in Christchurch, is that frustration of why couldn't you help me earlier? And the reason we haven't been able to help particularly residential customers earlier is we don't have the claim lodged with us to start with. Now, when people buy from a brand, they expect you to be there for them and to help. So that's part of, could the claim get lodged with the insurance sector first and actually be managed in a way that the consumer feels they're being helped by the brand that's assisted them. And we've had a lot of discussion as an industry across all sectors to say how could this practically work, and it will be an improved position. It's not only about a big earthquake, you have landslip happening here and there, and it intersects with the claim. So how do we get a more streamlined and a more efficient process for all involved?
Sure, and if we look at the, the financial side of that, do you think that'll leave insurers in a stronger position, or
It will drive some efficiency, obviously, than double handling of claims, and the people that will be most interested will be the reinsurers who feel that they've had to pay 3, 4, 5 times for the same assessments. That doesn't make sense. And remember, this all then goes to the price of a policy. So we're trying to work, how do we get all that friction cost out so you can actually make insurance more affordable. In terms of the premium pool, I mean, for us, it will be about understanding what the premium pool will be, and then how do you make sure you've got the right reinsurance attached to that, what's on the Crown's balance sheet and what's on the private sector's balance sheet. But for us, it's about getting more efficient and getting some of that friction cost out and making reinsurers. I mean, at the moment, there's a lot of capital around the world, so we've been able to attract reinsurers quite easily in this part of the market. That hasn't always been the case. So how do we make sure we stay attractive to the reinsurers? And if you're a system with a lot of friction costs in it and one that's prone to problematic claims when the worst happens, then it becomes a less attractive market.
Yeah, for sure. For sure. I'm sure lots of people would have appreciated only going through one channel more quickly.
Yeah.
Yes. Well, Jacki, thank you so much for joining us. We've covered quite a bit of ground today, and really appreciate your time. So thank you for that.
It's a real pleasure.
Thank you.
Thank you.
I'm Janae Tibshirani here with interest.co.nz.